Hey there. If you're looking for a proven way to grow your wealth while earning a steady income, this video is for you. Today, we're diving into the top 7 secrets of dividend investing that even seasoned investors swear by. Trust me, you'll want to stay until the end because we're uncovering strategies that can secure your financial freedom for life. So buckle up, hit that like button, and let's jump in. 1. What are dividends and why should you care? Let's kick things off with the basics. What are dividends? Think of them as a thank you note from companies you invest in, except instead of a card, they send you money. Seriously, dividends are regular cash payments some companies distribute to shareholders as a share of their profits. Here's an example. If you own 100 shares in a company that pays a 1 dividend per share, you'll get 100 in your pocket. Pretty sweet, right? Now these dividends are often paid quarterly, which means you'll get multiple payouts throughout the year. It's like payday, but for owning something instead of working for it. Why should you care? Dividends are not just about the regular income. When reinvested, they can have a compounding effect, growing your investment exponentially over time. In fact, studies show dividends account for about 40% of the total returns on the S&P 500 over the past 90 years. Yup, dividends are a big deal. 2. The magic of predictable income. Here's where things get exciting. One of the biggest perks of dividend investing is predictable income. Imagine receiving regular payments that you can rely on, even during market downturns. Sounds like a dream, right? For retirees, this steady income is a total game changer. It keeps the lights on without having to sell your investments. And for younger investors, it provides extra cash flow to reinvest and grow your wealth even faster. But not all companies are created equal when it comes to dividends. This is where Dividend Aristocrats come in. These are companies that have consistently paid and increased their dividends for at least 25 years. Think Coca-Cola, Procter & Gamble, and Johnson & Johnson. These companies are financial powerhouses that rarely miss a beat, no matter the economic climate. So if you're looking for stability, Dividend Aristocrats are a must-have. 3. The growth supercharger. Compounding dividends. Let me hit you with one of the most powerful forces in finance. Compounding dividends. Here's how it works. Imagine you invest $500 in a stock that pays you $25 in annual dividends. Instead of pocketing the cash, you reinvest it and buy more shares. These new shares also generate dividends, and this snowballs year after year. Over time, that $500 can grow into thousands, and you didn't even break a sweat doing it. Now that's passive income at its finest. Warren Buffett is a huge fan of this strategy. He often says, "Time is your friend in investing." The earlier you start reinvesting dividends, the bigger your portfolio grows from compounding. So if you're not reinvesting dividends yet, what are you waiting for? 4. The risks of relying solely on dividends. All right, it's time to get real. While dividends are amazing, they're not without risks, and you need to know what you're getting into. Here's the deal. Dividend payouts are not guaranteed. If a company faces a rough financial patch or a market crash, they might reduce, or worse, eliminate their dividends. This happened during the 2008 financial crisis with big names like General Electric and Bank of America. So you can't rely 100% on dividends as your sole income stream. Another downside? High dividend-paying companies aren't always the fastest growing. They're often mature, stable businesses. Meanwhile, high-growth companies, like tech startups, might prioritize reinvesting profits over paying dividends. So if you only focus on dividend stocks, you might miss out on some massive growth opportunities. The solution? Diversify wisely. By mixing dividend-paying stocks with growth-oriented investments, you can balance stability and growth in your portfolio. 5. How to build a rock-solid dividend portfolio. Here's where the fun really begins. Building your own dividend portfolio. So let's break it down step by step. Start with your goals. Ask yourself, how much income do I want to generate? For example, if you want $40,000 per year and your portfolio yield is $41 million portfolio, choose the right stocks. Focus on companies with stable and growing dividends. Dividend Aristocrats are a great place to start, but don't forget to check industries like utilities, healthcare, and consumer goods. They've historically been reliable dividend payers. Diversify across sectors. Never put all your eggs in one basket. Spread your investments across different industries, like tech, utilities, healthcare, and retail. This protects your portfolio if one sector struggles. Consider high-yield options. For extra income, you can explore covered call ETFs. These funds write call options on the stocks they hold, generating additional income. It's a great way to boost cash flow, but remember, it caps your potential gains, so it's not for everyone. And don't forget to reinvest those dividends. Every dollar reinvested is like planting a seed that will grow into another tree, producing even more dollars. 6. Tax hacks and efficient investing. Here's a juicy tip that could save you tons of cash. Be smart about taxes on dividend income. In the US, there are two types of dividends. Qualified dividends, taxed at long-term capital gains rates, lower, usually 0%, 15%, or 20%. Non-qualified dividends, taxed at ordinary income rates, which can be as high as 37%. If you want to maximize your net income, aim for qualified dividends from US companies whenever possible. And here's another hack. Not all dividend income has to go to Uncle Sam right away. By holding dividend stocks in tax-advantaged accounts like IRAs or 401ks, you can defer taxes while your investments grow. This strategy is a game changer for long-term investors looking to protect their returns from taxation. 7. Why dividend aristocrats are your best friends. I've mentioned dividend aristocrats a few times already, but let's dive deeper because they're that important. Dividend aristocrats are the gold standard of dividend stocks. These elite companies have not only paid dividends for 25 plus years, but have also increased those payouts year after year. Let me give you a couple of real-world examples. Coca-Cola, iconic brand, consistent growth, and reliable dividend payments for decades. Procter & Gamble. Think of household essentials like toothpaste and laundry detergent. No matter what the economy is doing, people will always buy them, which means their dividends stay steady. The key here is reliability. Investing in aristocrats ensures a stable income, even during market highs and lows. It's no wonder these stocks are the backbone of so many retirement portfolios. Final thoughts. Why dividend investing is perfect for you. All right, folks, we've covered a lot. What dividends are, how they create predictable income, the power of reinvesting, and strategies for building a rock-solid portfolio. But here's the best part. Dividend investing is for everyone. Whether you're a young professional just getting started, a retiree looking for reliable income, or somewhere in between, dividends offer a way to grow wealth passively and sustainably. But remember, the secret to any investment strategy is starting right now. Don't wait for the perfect time to invest, because the best time was yesterday, and the second best time is today. If you found this video helpful, don't forget to smash that like button, subscribe for more financial tips, and let me know in the comments which dividend stock you're most excited about. As always, thank you for joining me. And until next time, happy investing.